more, let's hear from Jean-Pierre Lambert. He's a banking analyst at Keefe, Bruyette Woods with 2 decades of experience in the industry. Great to see you, Jean-Pierre. The first tests were ridiculed virtually across the board. Are these going to be any more useful?
I would be careful with saying that the previous tests were not useful. If you look at the number of banks which were just above the threshold, 7 banks didn't pass last year, but there were banks which were 2%, too little. And that is where the demand for additional capital came. So we had probably around 100 billion capital raised by the banks after the stress test. So the market will look at the banks which just passed but are below the 2% additional threshold, and that will probably trigger additional capital.
But isn't the big problem here that these tests totally disregard a default scenario? And if you've got the credit ratings agency saying there's a 90% chance that Greece will default, you've got to have that.
Well, I think the market will have all the data today to run their own stress test. We'll have the maturity, we'll have the bond holdings, we'll have the portfolios, and we'll be able to apply mark-to-market data to these bond holdings. So the market will run these own stress tests over the weekend.
But doesn't that cause even more confusion in the markets if everybody else is going to come out and say, well, we think there's a problem here, but the stress tests are saying this, but we think that, and there's just adding to that confusion?
I don't think it will add to the confusion. I think it will put some pressure on banks to raise capital, and that's the positive result of the last stress test, and we're going to see the same pattern, I think, this time.
What's your predictions? Where do you see the most bank failures of these tests coming up? The usual suspects, a few in Spain, a few here, a few there?
Well, we expect something like 90% pass. That means 10% fail rate. That's about nine banks. The results have been in place for a few days, so they've been leaked. We know that some Spanish banks will be there. We know some German will be there, and perhaps a Greek one. That's the information which is spreading for the moment.
And what happens if these banks do fail these tests? What is the implication of that for the banks and for the market?
I think, well, the key success factor as well of these stress tests is that there will be backstop facilities available with capital available in the countries. There's capital set aside in Greece, for example, to recapitalize the bank, the same in Spain.
You're confident there is enough cash out there and enough will for those banks that fail these tests will get recapitalized by their nations?
Absolutely. The next wave, of course, will come for the banks which are just above the threshold with a 2% distance, and then we'll see how much capital raising there will be in the next few months. That will be the success factor for these stress tests, I believe.
By publishing so much, doesn't this just add to a general sense of nervousness in the markets? And goodness knows the markets don't need any more.
I think transparency in general is a good thing, and it will help us to really measure the risks in the various banks where there's a borderline question. And I think, as we saw before, the banks can take action, and the authorities can take action when they believe there's a borderline situation.
Okay, Jean-Pierre Lambert, thank you very much indeed for coming in to talk to us here on Bloomberg today.